Good day everybody, I trust that you are well. The purpose of this video is to run you through my record of advice with regards to the shares that you are acquiring in Asia Pacific Basket Ltd. In terms of legislation, I am obliged to confirm everything in writing that I have discussed with you either face-to-face or telephonically. So here it is. Your name will be on top there. Then it's my details, PSG's license number, my contact details. As far as needs determined are concerned, I've put their diversification against the Rand and South Africa. For those of you that are currently staying abroad, I will obviously not include that as a need, as you are already invested in hard currency and you are already living abroad. For those of you staying in South Africa and investing in rands, I've put their offshore investment in hard currency, in other words dollars. Exposure to offshore equities. As we know, equities is the asset class that gives you the best probability to beat inflation over the long term. From a time horizon point of view, I've put there 5 years plus with no income requirement, even though the deal is only for 3 years and 4 months. I've put 5 years plus, seeing that this is your long-term money that we are investing in the structured product. Then I've put down principal preservation and inflation beating returns in hard currency, and this investment will be in US dollars. As far as products considered are concerned, I've put there, I've considered direct investments and I have considered offshore endowment structures, and I have, under both A and B, I considered unit trust, listed share portfolios, exchange traded funds and structured products. And then as far as my recommendation is concerned, you will see I said invest directly in Asia Pacific Basket Ltd, in other words option A, by way of either an asset swap for those of you that are investing via companies and trusts. This will state via asset swap. For those of you that are investing less than $1 million, it will say in your individual names, it will say here your single discretionary allowance. And for those of you that are taking more than $1 million, it will state by way of your foreign investment allowance. And then for those of you that already have the funds in hard currency offshore, it will only say by way of utilizing existing offshore funds. As far as reasons for my recommendations are concerned, I've put here, please refer to annexures A to F. And I said there that you are comfortable with Investec. I'll insert bank there, Investec Bank sub-debt credit risk. And then as far as client decision is concerned, implement recommendations as proposed. It will have my signature on it here. If you married in community of property, both spouses' names will reflect on this document. If you married A and C, there will only be one line here just with your name. If it's for a company, it will have the authorized representative's name there, and I will require a resolution that states that you have authority to sign this document on behalf of the client. The same goes for those of you that are investing via trusts. One of the trustees must be authorized to sign on behalf of the trust. So if we quickly cover the annexures and we look at annexure A, which is basically my summary of the investment documents in layman's terms. So the Investec documents was the last two annexures, which will be annexure E and annexure F, which was the brochure on Asia Pacific. This is the original Investec marketing material, which I've also put as an annexure. You just have to sign the first page. You'll note that that is 8 pages, and they also included the frequently asked questions, and you will see that this is as at October 2017. Remember, this deal was concluded in December 2017. And this is the 13-page document. So my summary, annexure A, is basically a summary of those two documents which I've summarized in 3 pages. So if we go through it, the investment in Asia Pacific Basket gives you the opportunity to invest 40% in the top 500 companies listed in America, 30% in the top 50 companies listed in Europe, 15% in the top 225 companies listed in Japan, and a 15% exposure to the MSCI emerging markets, being Brazil, Russia, India, China, South Africa. In other words, 100% offshore equity. You invest in a company that's incorporated in Guernsey and which is listed in Bermuda. In other words, it's governed in 3 jurisdictions: South Africa, Guernsey, and Bermuda. Asia Pacific has an independent board of directors, and the company gets audited by independent auditors on an annual basis, which is available to all shareholders. I'll forward you the link to Praxis's website, where you can get access to these audited financials on an annual basis. So the Guernsey company, being Asia Pacific, therefore only invests in 2 assets on day one. It invests in a bond and it invests in a call option. So what I just said here is underlying, it's a passive investment, and what I mean by that, it's not an active investment. There's no decision making taking place in terms of which shares to buy and which shares to sell. The different exposures to the different indices therefore remain fixed in these percentages over the 3.4-year term. Then I say, but because the share is listed in Bermuda, you get daily pricing as on any other listed share. The value of the share gets calculated by adding the daily value of the bond to the daily value of the call option, plus whatever cash is still sitting in the company over the next 3.4 years. Then I just mentioned here that 99.71% of your capital is guaranteed at the end of the investment term in US dollars. Now, this percentage might change slightly depending on what day your transaction gets concluded, because remember, this is now a live share that prices every day. And you will note, since my initial discussions with you, it's always been more than 99%, but sometimes it was 99.5%, 99.8%. The figure that I used here was the latest one that I obtained from Investec, which was as at the 31st of July, which is 6 days ago. Then I just confirmed here what I confirmed verbally. It's a very tax efficient structure, as you can lock in your growth at the end of the 3.4-year term without selling your share and by rolling it for a further term. This is a very unique feature of the product, as usually you have to sell a share if you want to unlock profits. The structure therefore allows you to lock in your profits every 3 to 5 years without triggering a tax event. So why do I say that? It's because you own the listed share and you do not own the bond underlying that accrues interest, and you also do not own the call option that can attract capital gains tax. Therefore, no tax is payable by you during the investment term. The Guernsey company, namely Asia Pacific, owns the bond that accrues the interest, and it also owns the call option that attracts the capital gains tax. But because there is no corporate tax in Guernsey, Asia Pacific doesn't pay any income tax on the bond, and also it doesn't pay any capital gains tax because there is no capital gains tax in Guernsey. And then I just mentioned here, Asia Pacific is not a controlled foreign company, as individuals and corporates and trusts from around the world are shareholders in the company. And I could have added there, and nobody owns more than 10% of the company. The company also doesn't have to pay tax. The cost of the investments are very, very low. And more importantly is that all the costs, being the distribution fees, the advisor fees, admin fees, auditors fees, all fees have been built into the structure, in other words, into the par value of the share. Therefore, no fees will be deducted from this investment over the 3.4-year term. All the fees will be paid from within the company, which has already been provided for. From a risk perspective, remember now, your upside comes from these markets, but from a capital protection point of view, you take credit risk on Investec Bank Limited, as the company, namely Asia Pacific, bought an Investec Bank US dollar sub-debt bond. So you have to be comfortable with Investec Bank. But from a mitigation point of view, let's just quickly have a look in terms of where do we rank from a security point of view. So I've put there, subordinate debt holders rank third in the queue when it comes to potentially losing your money. First, the ordinary shareholders have to write down the total share capital down to zero. Then the preference shareholders have to write down the total share capital to zero. And only then does the sub-debt holder stand a chance of losing any money. So I've inserted one of the annexures here just below, just to show, in a worst case scenario, should something happen to Investec Bank, who gets paid first and who gets paid last. So the other way to look at that is who loses everything first and who loses, stand a chance of losing anything last. So I'm quickly going to shift to that annexure. If I can just quickly find it. Here, just to enlarge it slightly for you. So if we look at the capital structure first, we will be owning the sub-debt, which is 13.4 billion rand in total. So if we have a look at who's going to lose everything first, it would be the ordinary shareholders of Investec Bank Limited. And the ordinary share, the market cap of Investec Bank Limited is sitting at 36.5 billion currently. And the preference shares is about 1.5 billion, and then they have preferred securities of about 400 million. So I've put there in total 38.4 billion has to be written off completely before the sub-debt holders stand a chance of losing any money. If I go back to my record of advice, I've basically added in here, as per page 4 of the Investec Bank Limited's credit ratings fact sheet as at March 2018. So this is the most recent one that I have, which was for another offshore company that we rolled at the end of last year. It was just for illustrative purposes to show that Investec currently has 116.5 billion rand in cash and near cash balances, and the chances of them not repaying 13.4 billion is highly unlikely. If we ignore the billions for a moment, if you have 116 rand in cash and you have a debt obligation of 13 rand 40, what are the chances that you are not going to be able to repay that? Is that you've got more than 10 times cover from a cash to debt ratio. I have also included this annexure in full, which is annexure B on Investec. So if you want to delve into some more details, there's the portion that I've basically cut and paste into my record of advice, showing that the cash and near cash balances are sitting at 116 billion. But even if you look at it, Investec from a capital adequacy ratio point of view, Investec holds capital in excess of regulatory requirements. The gearing is very, very low. If you have a look at banks that have in recent years come into difficulty, they were more than 40 times geared. Investec is sitting at 11.2 times. From an asset quality and exposure point of view, very, very low non-performing loans. And like I mentioned, from a liquidity and funding perspective, a very, very liquid, very, very liquid scenario that they find themselves in currently. Just moving back to my record of advice, the other risk that you are taking is on the issuer of the call option. which we now know is UBS Bank. And UBS is one of the top 15 global investment banks, and it currently has an international Standard & Poor's rating of A. It's actually A+. I've just put in A there. So as a mitigating factor, I said their rating is better than any of the current local banks' credit ratings. So if you have any funds with the local banks that have a worse rating than S&P, the money that you have with the local banks is a bigger risk than UBS not being able to pay out our profit on the call option. The other risk that you will be taking is currency risk. So for those of you that are that currently have rands that you're converting to dollars, as you know, you can never time currencies. You don't know in 3.4 years' time what the rand will be. So I've just put there might be a scenario where the rand have actually appreciated over the next 3.4 years. Just keep in mind, like I mentioned, whenever you invest in a hard currency, you measure in a hard currency. So we will always measure this investment in dollars relative to US dollar inflation, which is currently 1.6% per annum. And that is it. So if I briefly run through the other annexures, this was basically the summary that Investec compiled for me on the secondary shares as at the 31st of July, showing exactly how much shares is available, the time left to expiry, and then the two main rows that you need to focus on is the underlying move and what influence will that have on the share price. So like I have explained, if we look at the negative scenarios first, if markets move -5, -10, -15, -20, -25 from current levels, the maximum loss that you can incur is 0.21%. In other words, 99.79% of your capital is guaranteed. From a positive scenario point of view, if markets increase by 5%, 10%, 15, 20, 25, 30% from current levels, what is the maximum upside that you can expect? You can see if it goes up 5, you'll be on 5, but the gearing kicks in after 5. So if markets go up 10, you will get 16. If markets go up 15, and this is now over the 3.4 year term, not per annum. So if it increases by 5% per annum, you will get 28% in dollars. If it goes to 20, 39, and as I've mentioned, it caps out at 52.78% in dollars. So there is no other investment that I know of that you can invest in currently that provides you with a 99.79% capital guarantee, subject to Investec credit risk, and that also provides you with a geared upside where the market only has to do 25 in order for you to get 51% in US dollars. If we move on to the next annexure, you will note that I've named them B1, B2, and B3, as these three annexures basically should be viewed as one. Investec has color-coded the figures that they've used on this summary. So the only purpose of including this in your annexure was just to show where did they get those figures from. This is the fact sheet of Asia Pacific as at the 31st of July, which confirms the weightings to the different indices, as well as the gearing that I also have discussed with you. You basically get 2.4 times whatever the weighted movement is of those indices. It feels like I'm skipping one. No, I'm not. If we look at Annexure B, this is a short summary, just confirming the figures that I've now mentioned. Downside protection, 99.79 in dollars. You take Investec bank credit risk. It's the Tier 2 sub-debt that we will be owning, referred to Annexure D. It's UBS Bank that provides the credit option. Your currency risk is rand dollars. The gearing level is 240.1. and the return is capped at 52.78 in dollars. Those are the indices again, the remaining term. What I have added in this annexure is what will happen at maturity if you decide to keep the investment and roll it for a further period. No tax event will be triggered. And if you decide to sell, you will trigger a capital gains tax event whereby you will pay tax in hard currency converted back to rands at the spot rate or the average of the last 1 year, less your 40,000 Rand capital gains tax exclusion times your inclusion rate, which will be 40% for an individual, it's 80% for a company, and it's 80% for a trust, times the marginal tax rate, which will be your individual marginal tax rate. For a company, the marginal tax rate is 28%, and for a trust, the marginal tax rate is 45%. This was the Investec financial information. We have covered that annexure. I have covered the structure. I have mentioned to you that this annexure is just the initial marketing material as at 2017, and this was the frequently asked questions. So those are all the annexures. You can sign this one in full for me, next to me there, and all the other annexures you can just initial the front page. You don't have to sign all the pages. You can, for instance, I beg your pardon, Annexure A, I would like you just to initial every page for me. So there are 3 pages there, but anything from Annexure B onwards, you can just initial the front page if there's more than 1 page. Like here, you can just initial the front page, and just send all the front pages back to Carly. And that is it. If you have any further questions, please do not hesitate to contact me. Investec is working on a first come, first serve basis, so it is quite important that we get your application forms in and that we get the proof of payment to them in order to secure the capacity for you. But yeah, like I said, please do not hesitate to contact me should you have any questions. Have a good day. Cheers. Bye.